Hello, everyone. Welcome to ECB today. And we have a meeting in a couple of minutes with ECB. They are probably gonna rate their hike by 75 basis points. So, hope you guys having a great day. We're gonna go through that, and then we're gonna go through some charts, and then we're probably going to be done whenever Christine Lagarde is finito finale with whatever she's going to do today. So, just going to give you a small little update there is that I took profit on Euro Yen today at around 68, give or take, somewhere around there. And I bought at 139, 50, and 113. And that's that's a good, what is it? 450 pips. Boom. Bob's your uncle. Euro, is it going to be 50? Is it going to be 75? Well, the market is pricing in 66%, I think it is. 66 basis points. So they're somewhere in the middle. Hi, Eddie. Hey, Dev. You've not been to Twitter Nick's live, haven't you? Yeah, you haven't. But that's where I've been last couple of days, and I will be there today and tomorrow as well. So, adios. Good morning, Kevin. Good day, Eddie. Good day, Eugene. And 50 or 75? I'm going to say 75. And then you will say that I am wrong in the end. But that's that. Somebody said, "Oh, David, why do you have so many tabs open?" I'm like, why do you have so few? Hi, Heinrich. I am supposed to look at your whatever you sent me. I'm sorry. I will. Dovelo, good morning. So, yen pairs. Sorry, that's that. It's been great. It's been a great ride with Jens. I don't know how many pips I have, but sure do. It sure do. We are above 1,000 pips in profit with all the others. So that was an easy peasy lemon squeezy. What have you been smoking? No, you cannot. You cannot sell the euro yen at all at 144, 117. Not at all. It's on pairs. What's your take on DXY? I don't know, mate. You tell me. You're the expert, aren't you? Joe! Good day, good morning. Over across the pond. So euro yen is still very bullish, and I'm going to buy it if it continues rising again. So if this one falls, it falls. And that's what I'm fearing at the moment. That's why I took the profit. But good day on that. Euro dollar index, sorry, it's still bullish. Hadong says, good evening. Good evening to you too. Some of the retracement I was thinking. So I said, well, bro, if you are going to be one of those, that is giving me money, then you can be one of those. Euro yen, 80% of retail traders are short 10,000 positions, and they are generally 600 pips in loss. If you want to be a part of those, go ahead, sell it. That's totally up to you. By the way, I'm not going to give you any financial advice whatsoever across anything. It's only my personal opinion whatsoever. But if you want to sell your yen, sure, do it. Do it. Do it. But don't come to me crying. Don't make a loss. And it's purely your own fault. I've told you not to do it. So it's up to you. DXY still bullish, still expecting it to go higher. Just having a pullback at the moment. And I was told I was comedian yesterday. And to be honest, I haven't cracked a good joke in a very long time. So but to be honest, But the other one is, I cannot believe it. So, hi, MP. Hi, Rafa. There's going to be a meeting today. So, be sure to be ready. Euro dollar has risen way more than I ever thought. So, well, we got a good pullback there. The only problem that I have for euro yen, euro dollar at the moment is that what if it sets up for another 100 pips? Pooh, whoops, going higher. But what I've seen today, by the way, if you want to know what I've seen, my two eyes have seen, is that any rise in the euro dollar is a reason to sell it again. So, whatever. Something is stuck in my chest. Maybe it's a squirrel. Oh, maybe it's too much. Pound is also gaining strength. Yeah, we'll do it. Konstantin. Well, in the correction of DXY, it's a good day to sell USD yen. If you haven't bought USD yen, mate, then yeah. 1 minute, actually. 1 minute. Oh, no. Don't do it. Where is it? My FX Street. Where is it? It's there. Okay, cool. Where are we now? Come on. There we go. Whee. And then we have to go to ECB, and then this is euro yen at the moment. Cool, good, thank you. Komplett idiotisk, altså. Sånn da. Euro yen is rising, and what's the verdict, you might ask? Nothing. They still deliver they deliver 75%. Ooh, woohoo! Let's go! Let's go higher. There we go. Euro yen, a bit of something there, but euro dollar coming in for a green candle there. Green candle on euro dollar. That's great. So some of the market was wrong. And then we have to go to ECB monetary policy-ish meeting. Hi, Roxana. Hi. I already have a winning trade from 138 morning close. Okay, cool. But yeah, the thing is, people, you have to give me the benefit of the doubt because you guys just give me half statements. You guys just give me half statements. So whatever. What did we decide to do? So research and publications then. Homepage. Press release. There we go. Finally. The Governing Council has decided to raise the 3 key ECB rates by 75 basis points. Major front loads transitioning from prevailing what? Need to read this clock as well. So they're just saying it marginally rose. ECB looking ahead, ECB staff has significantly revised the inflation projection. Now expected to be above 8.1, 5.5, and 3.2. Yeah, good jobs. Yeah, not really. But as you can see, I'm not buying it. I'm just saying I'm not buying it yet. But yeah, so where was it? And then we have so anything else in that? ECB re-elevate their policy path regular basis in line with new information and changing inflation expectations. Yeah, thank you very much. Inflation reached 9% in that. Expression 8.1. As I said, 5.5 in 2023, 2.3 in 2024. After a rebound in the first half of 2023, recent data point is substantial Point slowdown in the euro area economic growth, with the economy expected to stagnate later in the year. In the first quarter of 2023, very high energy prices are reducing purchasing power of people's incomes, although supply bottleneck are easing. They are still constraining economic activity. In addition, the adverse geopolitical situation, especially Russia intervention to Ukraine, is weighing on the confidence of businesses and consumers. This outlook is reflected in the latest staff production. They now expect the economy to grow by 3.1 in 2022, 0 in 2023, and 1.9 in 2024. That is GDP. And yeah, Bob's your uncle. Miro! What up? Price pressure continues to strengthen and broaden across the economy. Inflation may climb further near term. Thank you very much. Danke schön. So, what else are we going to do now? What up? What else are we going to do now? Where are you? Miro, do you want to come on along for 2 seconds? 2 seconds? We haven't talked with you for a long time. I'm supposed to bring on more guests, but my brain cells. Okay, we can go through the market then. With regards of euro dollar, euro pound. I know some of you guys are in. Not financial advice, but yeah, okay, fair enough. Just be aware of it coming down a bit. But yeah. And 87.50 is still the target. About 68 basis points was priced in. So yeah. Euro news came and left. Euro dollar is falling. Euro yen is I don't know what euro yen is even doing here. What is euro yen? Is it not going to fall? Ich bin nicht falling. Ich habe nicht Intention about falling. That was my German English. But other than that, APP and PEP continues to reinvesting in full the principal payments maturing with securities. Okay. So they're still reinvesting it until end of 2024. Okay. Thank you. Danke. In focus. Whole page, and we're supposed to look at the web livecast. Oh, it's 45. Sorry, it's in 25 minutes. Okay. Are you going to put in your pants? Is that why you need 2 minutes? Miro. There we go. That Miro. Yeah, then you have changed your Discord face. So continue on, Ivan. I'm still very okay. So this is me and my trading, and I'm not a bad trader. I'm just I'm just comedian. This actually makes me have a little bit of pulse, because now I'm like, but what if I buy it? 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 Right. So what I saw from Euro is kind of what the market also saw. Nothing new, bullishly so far. And now we just have to wait for the ECB press conference and then take it from there. What am I supposed to do now? So Aussie yen. I still have a buy here. Did I take profit here? I probably took profit. Did I take profit yesterday? Probably around here. So we're now back at that price. My only concern here, good Lord people, is if we make a new lower low, then we are bearish again. So can you buy euro, yen? How big of a stop loss do you want, Ritz? I think that's the biggest question. How big is your stop loss going to be? Because this, my friend, isn't going to be an easy task, because your previous high resistance is kind of like down here 150 pips away. So I'm going to risk 50. Are you going to risk 10? Are you going to risk, what are you going to risk? 200? You know, what are you going to risk on it? That's the major issue. It's how much are you going to risk on it to get it up to where you should be. But yeah. So ECB comes out with a 75 basis point rate hike that nobody saw. But of course they saw it. They already priced it in, some of them already. And I mentioned that yesterday and the day before that. Sorry, that was the wrong one. That was Bank of Canada. I was supposed to find ECB. ECB is here. Yeah, 75 basis points. So that's that. So okay, cool. Whatever. But other than that, they did comment that we might stagnate later this year. So that's that. We have Miro in the group.
What's up?
What's up?
Wasn't here
How are you?
a long time.
Long time no see. Have you been across all the seas?
Across what?
Have you been across all the seas since there's long time no see?
Across all the seas.
It's the joke, mate. It's the driest
Oh, I
joke you've
got
ever
it.
heard in this entire life. That's why.
I wasn't trading whole August, so yeah, like a 30 days more actually.
You didn't trade
At
yen
all.
pairs now?
No. I wasn't trading at all whole August because for the strategy I'm doing now, I'm trying to follow the rules, and for the strategy I'm doing now, it is prohibited to trade in August, and I know why actually.
Where's
Because
September for crying out loud?
in a July I had very nice trades, like really, like seriously very nice trades. But then literally at the start of August, literally the 1st of August when I was trading, it all went to like down. Everything was just so bad, and yeah. So I know why. I was demoing, but I wasn't really like paying attention to so much so on charts. I'm just starting now to trade again.
Yeah.
Like this is the
Okay.
first week.
Yeah. Well, that's
But
a bad time to come in.
I heard you had a nice month, didn't you?
Nah, it's
I've
been
seen some
terrible.
messages. I've
It's been
seen some messages.
horrible. That has been horrible. It's
Yeah,
been
that's why I
horrible.
wasn't.
So,
That's why I wasn't trading at all. So man, a good
who
decision.
who are you, Miro? An asks.
I am a human being
From
living in Slovakia.
Slovakia, trading.
I was following actually even for not so long though. I think I started to use your strategy. I was following you since February or January this year,
Yeah.
but I've moved on a different strat. But yeah, Evan is really nice guy who can teach you very nice fundamentals. Like
But
seriously,
I can't
it
but I
helps me
can't
a lot.
teach you his technicals, eh?
Uh,
That's my
you
shortcut.
have a different strat than I use now, so yeah. But it's okay. But what like
Yeah.
the fundamentals are the same. So
Yeah.
that is very nice.
So you are one of those that has passed the Trader Central challenge with my strategy.
Yeah, yeah, I
As
did.
far as that's kind of where everything is coming from. So you have you were at least a profitable trader as far as I know. The last time we talked, can be different now.
Yeah,
My September, my August September has been fantastic. I booked 450 pips on euro today. Booked another some trades on CAD yen a bit early yesterday and Aussie yen. But so right now I'm just seeing if we're gonna go higher or not.
yeah, that's very nice.
So
That's a lot of pips.
huh?
That's a lot of pips.
Yeah. It's too high, mate. Should have bought it a week ago. Can you? Yeah. So, well, you are in Europe, right? So, what's your take on the gas situation? Do you know anything about that? The how how
It's not going well.
how scrutinized is people because of gas prices at the moment?
It's not going well. Yeah, like at all. Uh, I'm actually not looking at the news. I
Okay.
wasn't looking at news for gas for like I don't know 2 weeks ago, two
Okay.
weeks. But I know like the big news that
Yeah.
Russia stopped with the gas flows. But
Mm-hmm.
like the whole Europe has storage for the whole
For
winter.
3 days.
Nah, that's bullshit. No, not for 3 days.
No, my
For whole
calculations.
for whole winter, it's fine.
Yeah, for my calculations, I've seen that Germany has 8 billion metric tons or whatever, 8 billion metric whatever meter of storage that's what they use they use a day, and then they have 24 billion in storage. So maybe I'm wrong, but that's what I've seen at least, and that's maybe also why they are so afraid, because they have very little to go and they don't have a long time. So can you buy nat gas now, Shaik?
I wouldn't do that.
I wouldn't. um the problem with it is that Europe is going to do as much as they can to scramble together oil as much as possible, so that can lead to price going down. But for now, it is not bullish technically, and the other one is that if they are unable to do that, this is going to go higher. So patience, patience, that's all. So for me, though, maybe I'm wrong and all that, but for me, Europe can go into a financial crisis because of the gas crisis. Because 10 kroner per kilowatt hour, which basically means that you have gone from $200 to $2,000 to $3,000 a month in the electricity bill, is unsustainable for the common person.
It really is. It's yeah, it's crisis. We
So we
are
can
also
lose
preparing
money.
for it. So
Say what?
we are also as a family preparing for it. So.
Yeah. So winter is coming. So that's that. Got 200 pips on CAD yen. How much did I get? Because you can see my trade here. Okay, it's 200 as well. Okay, fair. I thought it was more, but fair enough. There's more than one trade here, though, but that's that. I think it's time to buy gold after the double top at the trend line. What do you think? Says Jesus Bermudez. Honestly, double top. Um, I was looking at it going lower, but if you want to buy, then you have to cross here and then higher. But yeah, it's kind of right now in a no man's land. So, or just pausing, just having a good time. So I wouldn't trade it at the moment. By the way, I really hope you guys are having an excellent time. Yes, we are. Because we have Miro here, and he always makes our faces smile and be happy.
So actually, when you were buying gold, like I don't know, 3 months ago,
Say what?
when you were buying last time gold, I was buying with you like 3 months ago. That was the last time
Yeah.
I was thinking about buying gold.
I tried to buy gold in like July, and that was the skittiest month, but it was good in the end. It was from 27th of
Yeah, the
July, then
whole
it
the
was
whole
bullish
the whole
again.
July was very good. The whole July, but yeah, now it's going to go down again. So that's to be expected. So I guess that's okay.
Has it has to happen. Do you well, so what kind of trades are you looking at the moment though?
I kind of moved on, and right now I'm only trading indices on the future market, and I'm trading sometimes Euro USD or Yen pairs because they tend to like I don't know how to describe it, but the strategy I'm using it is suitable for those pairs. I can trade any pair I want, but I'm trying to focus on just indices, like purely just on indices. But if I want to have some more trades, because I don't trade a lot now. Then I can trade like pound versus dollar or USD, but not so much. Pretty much, I'm just focusing purely on indices. Yeah. So mostly
Uh,
my trades are on S&P
okay, so
or
are you
Nasdaq. Yeah.
currently in S&P? Are you selling it or are you buying it or
Right now, my
what's
bias is bullish as of yesterday.
okay?
For today, in 1 hour, the NISE will be open, and I'll be trading like in the evening, like from 7 p.m. till 10 p.m. my time,
Mm-hmm.
uh, Central European time, and
Towards the close.
my bias will be bullish for today, just for the today.
Okay, will be
But
interesting to watch.
overall will be it's bearish, like heavily bearish. My goals, my targets are actually at 3,820, and the other one is 3,725. So it's just heavy bearish. Just only today it's for
Three
longs.
thousand what?
Uh,
Oh,
3,725.
okay. Would you have anything on US 30 Dow Jones?
For me, it's the same.
Okay. So bullish today, and then overall down.
Yeah, exactly.
Okay, interesting. To be honest, I didn't hear that you done that. Do that. Raphael asked, "Which city are you from?"
Pressure,
What do you? Huh?
pressure. It's called.
Russia. For those who want to start. Can you look at Aussie Cat? Yeah, I looked at it for quite 2 seconds there. In the background, but so right now you have that resistance to sell. If you want to buy it, come back tomorrow. And then I need to go double check on my euro yen trade. Okay, it didn't move. Still around the same price. Okay, so but Aussie CAD, I don't have any fundamentals. I don't know if you're bullish or buys on it, bullish or bearish on it. But what I can tell you is that it's pure technical for me, and it's currently bearish. But it, if you want a better outlook generally, sorry, come back a different day, I guess. But we have each target for the week, so I would wait until Monday, probably up 89.28. Also, bigger pullback before we can sell that again. Why are you buying your yen so high? I'm not buying it, right? I'm not buying it. I took profit, but there's a day trade in my brain tomorrow. I'm not. That's just to show you that if you're going to buy it, we're going to put your stop loss. So if we get a higher high, and a pullback, then we can put stop loss below here. But if you're going to put a stop loss now, you have to put a stop loss down there. I don't know how to say it, but it's probably something like that. So there's no other reason, mate, on the euro yen other than scalping it and then see if it takes us higher. Yens right now, it's difficult to take the peak, catch the peak, and if I'm going to trade it, I am going to trade it by 0.001 lot. So basically nothing. It's going to be in low monetary. It's just going to be for fun and jokes, to be honest. And yeah, euro yen is more than 40% above statistical weekly high. The statistical high is supposed to be 142, 143, and we 142.90. So 143.90. So very well aware of that. We're very well aware of where we currently are. The other one that is interestingly low is pound yen, but just going to mention something to you guys today, okay? If we turn bearish now, basically breaching the lower here now, you're going to see that we're going to continue lower. But until then, we're still bullish. And therefore, you can't sell any of the yen pairs yet. It's just too aggressive. It's just too crazy. And then the big question is, why did you leave Forex, and why did you start indices?
That's just my so I'm using ICT strategy, and he has way different concepts than most of the people. And accidentally, I started it on July, and it was a very good month for it, and it kind of stayed with me because I know how good it can be. I just need to stick with the rules, and the rules are like so boring because like most of the days you cannot trade. Like I wasn't trading the whole month. Then this week, this is my only third day that I'm trading, and you have a lot of like blocks that you cannot trade in the day when Pavel has a speech. Like today, I'm not trading. Anyways, so like my days divided on AM and PM session on the indices. AM session is starting in an hour, and speech will be just before it. So I cannot trade AM session today, only PM. So like you have a lot of like books on those kind of things, but so how do I say it? Like I can be profitable just focusing only on indices. So I really don't need to focus on more things. But you can really trade anything with it, like really anything, commodities, pairs, forex, like whatever. But I'm trading indices, like purely focusing on it for like 2 months, actually more, like just purely on it. And I'm just trying to master it, and that's all I need. If you can be profitable with one pair, there's no reason to go to another. And I'm just it's not like just S&P. I'm trading like S&P, Nasdaq, and also Dow Jones. So yeah, that's pretty much like three indices, but they're all pretty much the same. So yeah, that's why I'm moved in. It's because of the strategy, and the mentor that is teaching me it is also doing mostly indices. So yeah, that's pretty much it.
Okay. Yeah, I've heard that you have told me in the chat that you're doing ICT, but for me that is just, it's a completely different thing, but also there is different ways to run one and thing else. So More than anything else, I wish you all the best. That's all. That's all. Yeah, I wish you all the best.
Yeah, I heard only wish you all the best because I walked for 3 seconds.
Say what?
But thank you. I heard only I wish you only the best because I walked for like 5 seconds or so.
Okay.
But thank you, thank you. I mean, it's going well. It's just the rules are tough. And it's very boring. It's very boring. It's like this the other side of the trading when you need to have like such high discipline on when and when not to trade, where it's different from what I was doing before. So yeah, it's just something different. If it won't be profitable in the end, then I'll stick with your strategy back again.
What do you mean? We made
Because I
we
have
made
because
a
I tried
sound of profits this week. Like, what do you mean?
because for strategy one needs to be disciplined. Like yes, also, but my discipline is so high right now that I think I can do it a lot better than
Well,
I was doing it before.
yeah, I think my shortfall, to be honest, my shortfall with my strategy is that you need to be very focused in specific times of the year, or like it's is like my trace doesn't show up every day, and for some that's boring for some people because for my clients they don't have time to look at the market every day or every hour. They barely have time for themselves throughout the week. So for them to just have a strategy that you could do once a week or once a month or once in, I don't know, the blue moon. So it's just different people, different strategies, and if you're bringing in the big bucks by the end of the year,
That's all
I
that
don't care.
matters.
It's all
Yeah,
that matters. And but you were at least profitable in my strategy, so you
yeah. I
know what
passed
it takes.
the challenge. Actually, I'm doing right now the 50K now. So yeah.
Okay.
I'm moving on.
Yeah. Okay. Yeah. True. Because the
Slowly
other
but
one was
surely.
10K. Now you're on
Yeah.
50.
So
Well,
we'll see how it'll be.
if you're if you're if you're not kicked out, you're still generally in it. Is it based on fundamentals, ICT, or is it pure technical?
um. So you need to have very good understanding of fundamentals. First of all, but secondly, it is also very technical. It is very hard. It is actually pretty hard. But when I started with event, it really helped me. Like honestly, it really did because your understanding of fundamentals, like is, and I don't think I have ever seen anyone having a better understanding of fundamentals better than you. So it definitely helped. But then also you start to learn those technicals that are only in ICT. So yeah, I mean, if you are here in event, you can learn his strategy, go his way. It's okay. But I mean, I tried ICT, and for now, at least, it is suiting me more. But I was profitable also with your strategy. So in the end, it doesn't really matter. But all that matters is that you have fundamentals and technicals, and in fundamentals, certainly, you are very good at. So at the very least, you can learn very good fundamentals here, and maybe you can try something different. But I don't think that it's a necessity because
Mm.
your strategy is fine. It's okay, but it needs also discipline, a lot of discipline.
Mm.
So yeah.
Thank you very much, Miro, for passing by. I wish you all the best.
Preußel. As we are meeting in a hybrid format again, I would like to ask those who will then later ask questions via their camera to put on their microphones and their cameras because we want to see.
We will ask the questions.
Lagarde. President Lagarde, please.
Thank you very much, Wolfgang. And good afternoon to all of you particularly those that I can see in the room. I hope you had a good break. So today, the Vice President and I welcome you to our press conference. The Governing Council today decided to raise the 3 key ECB interest rates by 75 basis points. This major step front-loads the transition from the prevailing highly accommodative level of policy rates towards levels that will ensure the timely return of inflation to our 2% medium-term target. Based on our current assessment, over the next several meetings, we expect to raise interest rates further to dampen demand and guard against the risk of a persistent upward shift in inflation expectations. We will regularly re-evaluate our policy path in light of incoming information and the evolving inflation outlook. Our future policy rate decisions will continue to be data dependent and follow a meeting-by-meeting approach. We took today's decision and expect to raise interest rates further because inflation remains far too high and is likely to stay above our target for an extended period. According to Eurostat's flash estimate, inflation reached 9.5% in August. Soaring inflation and food prices, demand pressures in some sectors owing to the reopening of the economy, and supply bottlenecks are still driving up inflation. Price pressures have continued to strengthen and broaden across the economy, and inflation may rise further in the near term. As the current drivers of inflation fade over time, and the normalization of our monetary policy works its way through the economy and price setting, inflation will come down. Looking ahead, ECB staff have significantly revised up their inflation projections, and inflation is now expected to average 8.1% in 22, 5.5% in 23, and 2.3% in 24. After a rebound in the first half of 22, recent data point to a substantial slowdown in euro area economic growth, with the economy expected to stagnate later in the year and in the first quarter of 23. Very high energy prices are reducing the purchasing power of people's incomes, and although supply bottlenecks are easing, they are still constraining economic activity. In addition, the adverse geopolitical situation, especially Russia's unjustified aggression towards Ukraine, is weighing on the confidence of businesses and consumers. This outlook is reflected in the latest staff projections for economic growth, which have been revised down markedly for the remainder of the current year and throughout 23. Staff now expects the economy to grow by 3.1% in 22, 0.9% in 23, and 1.9% in 24. The lasting vulnerabilities caused by the pandemic still pose a risk to the smooth transmission of our monetary policy. The Governing Council will therefore continue applying flexibility in reinvesting redemptions coming due in the Pandemic Emergency Purchase Programme portfolio, with a view to countering risk to the transmission mechanism related to the pandemic. The decisions taken up today are set out in a press release available on our website. A separate technical press release on the remuneration of government deposits will be published at 3:45. I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. The euro area economy grew by 0.8% in the second quarter of 22, mainly owing to strong consumer spending on contact-intensive services as a result of the lifting of pandemic-related restrictions. Over the summer, as people traveled more, countries with large tourism sectors benefited especially. At the same time, businesses suffered from high energy costs and continued supply bottlenecks, although the latter have been gradually easing. While buoyant tourism has been supporting economic growth during the third quarter, we expect the economy to slow down substantially over the remainder of this year. There are four main reasons behind this. First, high inflation is dampening spending and production throughout the economy. And these headwinds are reinforced by gas supply disruptions. Second, the strong rebound in demand for services that came with the reopening of the economy will lose steam in the coming months. Third, the weakening in global demand, also in the context of tighter monetary policy in many major economies, and the worsening terms of trade will mean less support for the euro area economy. And fourth, uncertainty remains high and confidence is falling sharply. At the same time, the labor market has remained robust, supporting economic activity. Employment increased by more than 600,000 people in the second quarter of 2022, and the unemployment rate stood at a historical low of 6.6% in July. Total hours worked increased further by 0.6% in the second quarter of 22 and have surpassed their pre-pandemic levels. Looking ahead, the slowing economy is likely to lead to some increase in the unemployment rate. Fiscal support measures to cushion the impact of higher energy prices should be temporary and targeted at the most vulnerable households and firms to limit the risk of fueling inflationary pressures, to enhance the efficiency of public spending, and to preserve debt sustainability. Structural policies should aim at raising the euro area's growth potential and supporting its resilience. Inflation rose further to 9.1% in August. Energy price inflation remained extremely elevated at 38.3%, and it was again the dominant component of overall inflation. Market-based indicators suggest that in the near term, oil prices will moderate, while wholesale gas prices will stay extraordinarily high. Food price inflation also rose in August to 10.6%, partly reflecting higher input costs related to energy, disruptions of trade in food commodities, and adverse weather conditions. While supply bottlenecks have been easing, these continue to gradually feed through to consumer prices and are putting upward pressure on inflation, as is recovering demand in the services sector. The depreciation of the euro has also added to the buildup of inflationary pressures. Price pressures are spreading across more and more sectors, in part owing to the impact of high energy costs across the whole economy. Accordingly, measures of underlying inflation remain at elevated levels, and the latest staff projections see inflation excluding food and energy reaching 3.9% in 22, 3.4% in 23, and 2.3% in 24. Resilient labor markets and some catch-up to compensate for higher inflation are likely to support growth in wages. At the same time, incoming data and recent wage agreements indicate that wage dynamics remain contained overall. Most measures of longer-term inflation expectations currently stand at around 2%, although recent above-target revisions to some indicators warrant continued monitoring. Let's turn to our risk assessment now. In the context of the slowing global economy, risks to growth are primarily on the downside, in particular in the near term. As reflected in the downside scenario in the staff projections, a long-lasting war in Ukraine remains a significant risk to growth, especially if firms and households faced rationing of energy supplies. In such a situation, confidence could deteriorate further and supply-side constraints could worsen again. Energy and food costs could also remain persistently higher than expected. A further deterioration in the global economic outlook could be an additional drag on euro area external demand. The risks to the inflation outlook are primarily on the upside. In the same way as for growth, the major risk in the short term is a further disruption of energy supplies. Over the medium term, inflation may turn out to be higher than expected because of a persistent worsening of the production capacity of the euro area economy, further increases in energy and food prices, a rise in inflation expectations above our targets, or higher than anticipated wage rises. However, if energy costs were to decline or demand were to weaken over the medium term, it would lower pressures on prices. Let's look at the financial and monetary conditions now. Market interest rates have increased in anticipation of further monetary policy normalization in response to the inflation outlook. Credit to firms has become more expensive over recent months, and bank lending rates for households now stand at their highest levels in more than 5 years. In terms of volumes, bank lending to firms has so far remained strong, in part reflecting the need to finance high production costs and inventory building. Mortgage lending to households is moderating because of tightening credit standards, rising borrowing costs, and weak consumer confidence. Summing up, we raised the 3 key ECB interest rates by 75 basis points today and expect to raise interest rates further because inflation remains far too high and is likely to stay above our target for an extended period. This major step front-loads the transition from the prevailing highly accommodative level of policy rates towards levels that will support a timely return of inflation to our 2% medium-term target. Our future policy rate decisions will continue to be data-dependent and follow a meeting-by-meeting approach. We stand ready to adjust all of our instruments within our mandate to ensure that inflation returns to our medium-term inflation target. We are now ready to take your questions.
Thank you, Madame Lagarde. The first question goes to Luke Heighton of Market News International.
Good afternoon, President Lagarde. 2 questions, if I may. The first, could you give us a flavour of the Governing Council's discussions, the arguments for and against that led to today's decision to raise rates by 75 basis points and not, for example, 50 or 100 basis points? And then my second question, from the present standpoint, how close to both the neutral rate of interest and the expected terminal rate does today's decision bring us, in your view? Thank you.
Thank you very much for these 2 questions. I'll take them in turn. On your first question, the Governing Council unanimously decided to raise the 3 key ECB rates by 75 basis points. We had different views around the table, a thorough discussion, but the outcome of our discussions was a unanimous decision. So how did we come to that decision? As I have said before, and as I have repeated in that monetary policy statement, since our last July meeting, we are data dependent and operate meeting by meeting. This is the methodology that we adopt. So we were presented by staff with their projection. We had the inflation numbers and the growth outlook, of course. So in the face of these extremely high numbers, the last reading was 9.1 for a monthly reading. But if you look at the last 10 readings, they were the last 10 highest readings in turn. We had a good analysis of the decomposition of the sources of inflation, a good analysis of where the inflation actually lies and what products are particularly affected. And while we conclude, of course, that energy is still the major source of inflation, it's 38.3% compared with a year ago, slightly moving down in these August numbers, but it is still a dominant factor, as is the increase in food. But we also have an inflation that spreads across the whole range of products, in particular in the service sector, where supply factors are less prevalent and where demand plays a role. So we have a range of the product and services that are actually north of 4%. So in the face of an inflation that is extremely high, that is of a magnitude and persistence across sectors of that nature, obviously determined action had to be taken. And this is very much in line with our determination to actually normalize monetary policy as we started back in December. So for those who consistently repeat that the European Central Bank is lagging behind, I contend that we are on a journey that started back in December, where we decided to put an end to the asset purchases under PEP and under APP, to move out of negative interest rates as we did back in July, and now to continue on our normalization path with a front-loading exercise that we conducted today, because we believe that the deviation from target is such that it warrants this front-loading. And we also decided that this was not an isolated decision, but that we would raise interest rates further. We didn't say that we would raise interest rates at 75% as if 75 was the norm. It is not. We will determine, meeting by meeting, on the basis of data, how we reach to that level of interest, which will actually return us to the 2% target in the medium term. It is not there at the moment. Our forecast at the end of December, which is not the medium term, but it's the end of our projection exercise, is at 2.3. We are not there. So we have more journey to cover going forward. But we had a very, you were interested in the flavor of the Governing Council. We had a very cordial, effective, deep discussion on all these matters. And that certainly helped us on the basis of the proposals by staff and the recommendation by our chief economist, Philip Lane, to actually go collectively in the direction of this 75 basis points hike. Now, you asked me about...
How about to fall off this chair, falling asleep? I have another stream on Twitter, Nick, in good time, 23 minutes from now. That's where you will find me. I will discuss more about what you say. If it says anything more positive, your dollar is currently at the moment falling. So Twitter, Nick, in 20 minutes, people. That's where you're going to find me. And you can see my glasses. I have 3 screens. Booyah. Happy trading, people. Your yen did not go higher. Boom.